Hey, what is going on, guys? It's your boy Nick, and in today's video we need to talk about the earnings that just got released for one of my biggest positions in my portfolio, that being Trulieve Cannabis with ticker symbol TCNNF. Now, to be honest, the stock price really isn't reacting today. That is pretty typical for Trulieve stock after earnings. However, I personally think these results were very solid, so now let's get straight into it right after you destroy that like button for the YouTube algorithm, and please also consider subscribing if you have not already. Well, that is a crying shame. I just recorded this entire video without my microphone on, so now let's get straight into it again. Alright, so as we can see, Trulieve stock is up about 2% on the day, which really isn't a huge move for some solid earnings. Then as we can see over the past year, the stock is still down 64% from its highs, which is just a crazy bad move. And for those of you that follow Trulieve on the Canadian Securities Exchange, this was up about 3.5% on the day, and then again over the past year down 61%, and then from its total highs, it is down 71%. This stock is getting insanely crushed. Anyways, here we can see Trulieve's Q1 earnings. So they started off the year with record first quarter results. Trulieve reported revenue of $318.3 million, up 64% year over year and 4% sequentially, meaning quarter over quarter. They had first quarter cash flow from operations of $45.1 million and a cash balance of $267 million, which for a market cap of $2.5 billion is just over 10% of their market cap. So that is a huge cash balance. Finally, Trulieve ended the quarter with 162 dispensaries, supported by over 4 million square feet of cultivation and processing capacity, up 95% and 93% year over year, respectively. Now, when it comes to analyst estimates, Trulieve actually beat their quarterly revenue estimates on strong pot demand, it says here. Trulieve reported quarterly revenue of $318.3 million, topping average expectations of $306.4 million, according to Refinitiv. So that is a very solid beat. About a $12 million beat, in fact. Now, Trulieve CEO Kim Rivers also commented on the earnings where she said, "We continue to see high growth in Florida in terms of medical patients on a week over week basis." And then she also added that there's the potential for the recreational program that would be a massive catalyst going ahead. All right, now let's get straight into Trulieve's earnings presentation for Q1 here. Now, getting straight into the financial highlights for the first quarter, we can see revenue increased 64% year over year and 4% sequentially to $318 million, which we already knew, but then the gross profit from that revenue was $178.2 million, representing a gross margin of 56% in the first quarter. And this compares to $132 million of gross profit, or a gross margin of 43.4% in the fourth quarter of 2021, so it definitely increased sequentially. However, we can see that Trulieve posted a net loss of $32 million in the quarter, but this was a sequential improvement of 55%. So that, along with the gross margin improvement, was due to that harvest acquisition happening in the last quarter. So a lot of these costs are diminishing over time, and eventually those costs will be completely gone, and then Trulieve's profitability will come back. Here we can see after backing out a lot of those costs, like the $17 million transaction, acquisition, integration, and other non-recurring charges, their adjusted net income was $1.7 million in the quarter. Next up, we can see their adjusted EBITDA, or the earnings before interest, tax, depreciation, and amortization, was $105.5 million, the highest ever for Trulieve, and this was 33.2% of revenue, meaning they have a 33.2% EBITDA margin. That is very profitable, guys, and it definitely shows how profitable this business could be outside of these one-time charges. Finally, we can see cash at the end of the quarter was $267 million, as we discussed before, and this was bolstered by $45.1 million in cash flow from operations and the closing $75 million senior secured notes at 8% interest due October 2026. Now, many of you might think that this debt is at a very high interest rate, but for the cannabis industry that's still federally illegal, this is an industry-leading interest rate. Next up here, we can see some charts. So obviously revenue increased 64% year over year to $318 million, gross profit up 32% year over year to $178 million, then adjusted EBITDA up 16% year over year to $105.5 million, an all-time high. Now, in terms of their operational highlights, I won't go through all of these, but I do just want to highlight that Trulieve opened 3 new dispensaries in Boca Raton, Riverview, Florida, and Philadelphia, Pennsylvania. And then their production in Q1 2022 was 9.8 million units, up 91% year over year, so they're definitely keeping up with the increasing demand and the increasing number of patients in Florida. Furthermore, Trulieve also acquired 64,000 square feet of operational indoor cultivation capacity in Arizona in this past quarter. Then they rebranded 22 affiliated and acquired retail locations in Maryland and Pennsylvania, which I believe are a lot of those harvest stores that they did acquire in the last quarter. Now, in terms of the financial outlook for 2022, Kim Rivers reiterated the financial outlook they gave last quarter, so revenue of of $1.3 to $1.4 billion. And if we divide their current market cap of about $2.5 billion by this 1.35 mid-range revenue for 2022, then this would give us a price to sales ratio of only 1.85 for Trulieve. So this is extremely low for quite a high growth company. Then we can see the company expects $450 to $500 million of adjusted EBITDA in 2022. So by dividing the mid-range of EBITDA for 2022 by their current market cap, we come out to a price to EBITDA ratio of only 5.3 right now. So that is a very good price and definitely shows that Trulieve is at a very good valuation. Then they reiterated that they're opening 25 to 30 new dispensaries and relocating up to 6 dispensaries in Florida, probably the ones that just aren't performing that well, and moving them to better locations. Finally, Kim Rivers said that they anticipate second half of 2022 results will reflect improved performance as strategic initiatives drive performance. So basically, I would expect their sequential revenue growth rate to re-accelerate from 4% sequentially to possibly even 10% sequentially in the second half of the year. Here are some of their recent developments. So they achieved record revenue, units sold, and number of customers served on 4/20 holiday. So that was just last month. They also launched and they're partnering with a lot of new brands within their dispensaries. So this is really good to see that they have a very broad exposure for their customer service. Now, in terms of their strategic priorities moving forward, of course, we already know that Trulieve expands through their hub strategies. So basically, they're investing in their cornerstone markets, such as Florida, Pennsylvania, and Arizona. And that means they keep on adding dispensaries to see growth. So each new dispensary could bring on $10 to $15 million annually. So yeah. And then I just wanted to highlight that they are focusing on profitable growth and creating shareholder value. So of course, they're not trying to dilute shareholders for growth. They're trying to stay profitable, not trying to take on too much debt. So this is a very financially responsible company. Here we can see the US map of Trulieve's operations. So they do operate 165 dispensaries across 12 different states, but the majority of their operations are in Florida, where they have 115 stores. Now, one of the most important slides here that I just wanted to highlight are these financial highlights where Trulieve calculated a lot of their margins and metrics. So let's get into it. First off, we can see here that Trulieve has grown their revenue every single quarter for the past 6 quarters, but even going back into their history, I don't think there's been a quarter where the revenue's been down. Moving on to the gross profit, we can see here in Q4 2021, their gross profit was down from Q3 to about $132.4 million, but then in Q1 2022, their gross profit was up significantly to $178.2, being an all-time high. And that of course represents a 56% gross margin, up from 43.4% in the last quarter, but it is down from Q3 before this acquisition, of course, because of a lot of those acquisition related costs and potentially lower margins within Harvest. Now we can also see their adjusted gross margin is a little bit higher at 58.2%, so that probably takes out a lot of those one-time charges, but still down a little bit from Q3 of 2021. And I would expect that over time, as the industry consolidates, Trulieve's margins will go down because there's going to be a lot more competition. So long term, I would expect about a 40 to 50% gross margin. But this could still make for a very profitable business model, so I'm definitely not disappointed in that. Next up, we can see their selling, general, and administrative expenses were down a little bit quarter over quarters to 33% of revenue versus 38% in the last quarter, and actually down from Q3, so this is really solid to see. However, the company did post that net loss again of $32 million, which was about half of what it was in Q4, so obviously the costs related to the transaction are going down over time, so that is good to see. And then they did post an adjusted net income of only $1.7 million, so basically break even. Finally, in the bottom here, we can see their adjusted EBITDA margin is staying very steady, although it is down a little bit from Q3 of 2021. That is expected with a lot of those one-time costs. Now, in terms of their balance sheet, we can see that Trulieve's cash position actually increased over Q4 2021, which is great to see. So $267 million versus $234 million, but that was a lot in part due to the $75 million of debt that they took on the balance sheet. So relative to history, we can see that Trulieve's debt has been increasing, but I would rather see that than them diluting shareholders at the current market prices. It makes a lot more sense, in my opinion, and probably management's opinion, to take on debt rather than dilute. Then obviously, as the stock price goes up over time, it would make more sense for them to dilute than to take on debt. All right, so with that being out of the way, let's get into their cash flow statement to figure out what Trulieve is doing with their cash flows, because we didn't really get to see a deep dive into those. All right, now right off the bat, we can see they had net income of negative $32.5 million in this quarter, compared to $30 million of positive net income in the last year's quarter. But of course, adding in in a lot of those non-cash expenses, that brings us down to the net cash provided by operating activities of $45 million versus $59.6 million in the prior year quarter. And I found out that the main difference between the cash flow from operations in this quarter versus the same quarter last year was the inventory valuation. So their inventory is actually reduced by about $22 million versus last quarter's of about $5.6 million. So really that's nothing too important. It doesn't tell a whole lot about the business. So all in all, these would otherwise be the same essentially after removing these inventory lines. Next up, from the cash flow from investing activities, we can see that purchases of property, plant, and equipment were $48 million, which was about the same as last year. So Trulieve isn't really increasing their purchases of property, plant, and equipment, which does surprise me a little bit, but that's all right to see. Now that I think about it, it's likely because of their acquisitions this past quarter versus last year where they didn't have many acquisitions at all. So in total, net cash used in investing activities was $83.8 million versus $53.3 million last year. So definitely a big boost. Finally, we can see under the cash flow from financing activities that Trulieve basically had no dilution this past quarter. I don't see any dilution lines here, but the main cash flow from financing activities was this private placement note for $76 million at 8%, as we discussed before. Nothing else here in the financing activities is really significant. So as we can see, the net cash provided by financing activities was about $72 million, the majority of that being from the private placement notes. Then of course, the main reason why Trulieve's cash and cash equivalents increased year over year was because of that financing activity cash flow from the private placement notes, and then also from the cash flow from operations of $45 million. So they ended with $267 million in cash. Great to see, guys. Very well capitalized. All right, now the last thing I want to do here is calculate how profitable Trulieve could be aside from all of these one-time expenses and basically what the PE ratio would be in 2022. So what I'm going to do is assume that Trulieve only achieves a 10% net profit margin or a net income margin. And I believe this is very possible because they do have an EBITDA margin above 33%. In fact, I believe this would be highly conservative. So this is basically the worst case scenario for Trulieve's future PE ratio. So if we take $318.3 million of revenue and multiply it by 0.1, so a 10% net profit margin, then multiply that by 4 for the entire year, this gives Trulieve a forward 2022 PE ratio of basically 20, or just under 20. That is a very good valuation for a company that has huge industry growth drivers over the next decade, and for a company that just grew 64% top line year over year. However, I should mention that because they did only have 4% sequential growth, that actually includes the acquisition. So the acquisition is making a big difference in that revenue growth year over year. So in reality, if they did only continue growing 4% sequentially, this would only represent about 17% growth year over year. But Trulieve did say that they are expecting the second half of the year to see a lot more growth due to their strategic initiatives having better performance. So I would expect the sequential revenue growth to reaccelerate, and then the year-over-year revenue growth to be around 20 to 30%, probably on the upper end of that range. And for a company growing top line 20 to 30% year over year and trading at a PE ratio of 20, that is quite a very good deal. But I will say though, guys, even though I did think these earnings were very solid for Trulieve, I'm not too eager to buy the stock right now just because of so many other opportunities in the market. I just think there's a lot more upside in some other stocks like Tesla and some other tech stocks that have just been beaten down to ridiculous levels. And you could argue that being the same about Trulieve, but because the market doesn't really recognize Trulieve as being a stable stock, even though it has a solid balance sheet, it could still remain depressed in the short term, in my opinion. So I'll probably just hold my position where it's at right now and then slowly add over time if I don't see as many other opportunities in the market, because I'm still very bullish on Trulieve. I love this company. I'll still hold it for the next 5 to 10 years. So anyways, if you did enjoy this video, don't forget to drop a like and leave your comment down below on what you think about Trulieve stock, because this is still one of my biggest positions and I would love to hear what you have to say about it. But anyways, with that being said, I will see you guys in the next one.